You've got a massive stock market crash, a viral analysis claiming to know the real reason why, and a really powerful metaphor about a collapsed bridge. So today, we're going to break down an argument that claims the Indian economy isn't quite what it seems.
All right, let's start with the headline number. It is an absolute jaw-dropper. According to the source we're looking at, in just one single day of trading, 10 lakh crore rupees of investor wealth just vanished. The source uses this one powerful Hindi word to describe it, swaha. Basically, gone, poof, wiped out.
And to give you a sense of what that actually looks like in market terms, the Sensex plunged 1,665 points that day. The Nifty also took a huge hit, down 353 points. The source paints a picture of a market that was just gripped by fear, collapsing like a house of cards. So what on earth was going on?
Well, according to the source, at first glance, it looks like a perfect storm of factors. A whole bunch of pressures hitting the market all at once, from right here at home and from all over the world. Let's dive into what those pressures were.
And when you look at the list, it's kind of wild how many things were going wrong at the same time. You've got a brewing trade war between the US and Europe, causing a ton of uncertainty. Then you have rising bond yields in the US and Japan, which pulls money away from riskier markets like ours. The Indian rupee was getting weaker, which is never a good sign. On top of all that, foreign investors were selling, and selling big. The whole global mood was just bad. No surprise that even our biggest stocks took a beating.
And let's just zoom in on that foreign investor piece for a second. The source points to this specific number. Over 3,200 crore rupees worth of shares sold off in one day. But here's the kicker. The source claims this wasn't just a one-off panic sell. Nope. This has been the trend for over a year, which suggests these big investors are seeing something that makes them nervous.
Okay, but this is where the analysis takes a really sharp turn. The source says that all those things we just listed, the trade wars, the weaker bee, they're just the symptoms. The real disease, it claims, is buried much deeper in the foundations of the economy. And to explain this idea, it uses a very tragic and very potent real-world example.
So you're probably thinking, wait a minute, a collapsed bridge in Gujarat? What on earth does that have to do with the stock market or the national economy? Well, the source draws a direct and pretty provocative line between the two. And here it is, the central claim of the entire analysis, stated very bluntly: our economy is the Morbi bridge. It's a shocking statement, right? It's designed to make you think that what we're all seeing on the surface isn't the real story at all.
Now, to really get what they're saying, you have to understand the story of the bridge itself. The source breaks it down into 3 simple, tragic steps. First, everyone knew there was a deep structural problem. The bridge had old, rusted cables that absolutely had to be replaced. But second, instead of doing the hard work, the contractor allegedly just put on a cosmetic fix, a shiny new coat of paint to hide the rust. And the result, the third step, a catastrophic collapse that cost over 130 people their lives. The source is arguing this exact pattern is happening with our economy.
Okay, so if our economy is this bridge, then what are the rusted cables? Where are the cracks hiding under that fresh coat of paint? Well, the source then rolls out some specific economic data that it claims is the proof. Take this, for example. It's a classic case of hype versus reality, according to this analysis. On one side, you had all this talk about a fantastic festive season, a time when sales are supposed to boom. But then on the other side, the actual corporate earnings from that quarter were, well, pretty disappointing. The source basically asks, if sales were so great, where are the profits? And it leads them to conclude that maybe those sales figures were just another cosmetic fix. And then there's this piece of data, which is pretty stark when you look at it. The source claims that historically, for the last 30 or 40 years, India's tax collections have grown by about 10 to 15% every year. But this year, for the first time in decades, that growth is expected to be less than 7%. For the source, this is a huge red flag. Less economic activity means less tax money, plain and simple. The analysis doesn't just look at past data, though. It actually makes a prediction about a big announcement that's coming up, framing it as yet another attempt to generate some good headlines without real substance. More paint for the bridge. So here's the claim about that huge India-EU trade deal. The source predicts we're going to see a lot of fanfare, a big declaration to grab headlines. But, and this is the key part, they allege the deal won't actually be signed. They argue it's a strategy to create the illusion of a massive win for the economy without actually having a finished, finalized deal. A declaration, not a done deal.
And really, this whole argument boils down to one powerful idea, captured in this final quote from the source. countries don't become strong through cover-ups. This one line just ties everything together, the market crash, the weak data, the trade deal, into a single argument that you can't just paper over the cracks. Real strength has to be fundamental.
And that's the argument, laid out from start to finish. It's a pretty compelling and honestly alarming narrative. But it does leave us with one very important question. Is this a genuine economic diagnosis that's pointing out some uncomfortable truths? Or is it a political attack that's just using economic data to score points? That is something for you to decide.